Welcome to the web series, Digital Financial Services and Risk Management. We are going to take about 1 minute, because I think it's about 1 minute until the presentation will start. So stay tuned. Okay, I think we're ready to start. I am Donna Nails, and I am the director of Phoenix BDH Consulting. I'd like to welcome you to the webinar, Digital Finance Services and Risk Management, being presented by Mr. Fahim Ali. This webinar is part of a series of webinars developed by Phoenix, focused on the topic of risk management. The series has received generous support from IFC and the Swiss government. Prior to introducing Mr. Ali, I would like to review some logistical items. Next slide. So for any technical issues that you may have during the seminar, please contact Aida Musovic, my colleague. Her email and her Skype is on the screen. For your information, all participants will be muted during the session. We are recording the session, and the link for the video will be sent to you with a follow-up email within 48 hours. For your information, on the GoToWebinar control panel that you'll see to the right of your screen, we have a few items. First of all, we have handouts. If you see on the right, you'll see an arrow and it says handouts. If you click on the handouts, we have three items that you can download. One is the risk management, this presentation. Another is a handbook from IFC on digital finance. And the third is Fahim's bio that we included. And it also includes his email in there. Next slide. Regarding questions, you can submit questions at any time during the session. Again, if you look at the GoToWebinar control panel and you click on the arrow next to questions, you will be able to see a panel that says type answer here, and you can write your question there. We will have hopefully about 10 minutes at the end of the session that we will review any questions. And if your questions are not answered during the session, Mr. Ali has graciously volunteered to answer the questions via an email that will be sent to everybody. With that said, I'd like to introduce our speaker. Oh, one thing I forgot, sorry, go future webinars, sorry. We have a couple of future webinars I want to announce. One will be loan review as a credit risk management tool. And then we're going to have a second webinar that's going to be facilitated by Mr. Ali, a DFS technology implementation. He had such an enormous amount of good information that we decided to split it into 2 webinars. So he will host that. We'll have those in the next coming months. Now I'd like to introduce Mr. Ali. Fahim, who I've known a long time, I should call him Mr. Ali, he's an international speaker and has an extensive background in digital finance and in risk management. He is currently the risk officer with Mosoni Microfinance Limited, which is in Kenya, and it is 100% on mobile, completely cashless, paperless, and data-driven. In his in the bio, which you can download, I had stated there is a more extensive description of his experience and also his email. So with that, we would like to start the presentation. Fahim?
Yeah, thank you, Aida and Donna. Hi all. It's my pleasure to present you the session and e-connect with you all. So in today's sessions, we will discuss the scope of digitalization, what is the major areas which people are actually digitalizing themselves, understand the potential risk in DFS, how we can mitigate the DFS risk, and the risk management framework, approaches, and processes. We will also discuss how we can manage risk and some examples from the practices what people are doing. Next slide. why managing risk? Uh, I would say how the main questions of all of us is why managing risk. And managing risk is important in any organization. The probability of risk may be low, but the impact of the risk matters a lot. So we need to give assurance to our management and shareholders that the risk is managed well in our organization. We should not only be fearing from the risk, but to understand so that it can be addressed well. So areas which is mentioned here, if you see, the assurance are more important. The cost, let's say, is more important also, that how you are understanding and how you are implementing your risk management framework in your institution. Next slide, Ida. Uh, People always ask, what is the difference between traditional risk or digital or emerging risk? Realistically, no single group or a person in a company has a grasp of the exposure that the entire organizations are facing. The best practices to address the risk is to understand them, mitigate them, and with the best practices, respond them with your action points or strategy. We will discuss these various risks related in the digital transformation and will learn how we can mitigate them. But the new emerging risk, which you will see in the next slide, Ida. The new emerging risk which you are seeing here are the most important. There is an emergency of new customer segment previously which was unreached, or it was invisible. Set of the customers are now visible. New players in the financial services sectors like mobile network operator or mobile money operator or fintechs, they have emerged that are both competitor and potential partners for all of us. New distribution modules or channels have been created like agent banking, like USSD, like IVR, or the networks, etc. So these are actually created in the market. There are now new opportunities for financial institutions, or I would say FIs, to use of the data to guide decisions from making credit scoring, improve processes. However, this is all has to expose financial institutions with the new emerging risk that required new mitigation approach, such as operational risk, cyber crime or cyber security, customer protection, and fraud related areas. So I would say if the traditional risk was there, it is no any major difference between traditional or the emerging risk. However, the emerging risk is the new business which you are focusing. So new risks are being faced. My question to you all is, what is the biggest risk you guys are facing in your organization? Next slide, or poll maybe, Ida.
So we are going to launch a poll, a very brief poll. And the question is, what are the top risks you consider in 2019 and beyond? The poll is going to show on your screen in a couple of seconds, and we will have 10 seconds for selecting the answer. The options are technology risk, strategy risk, political risk, reputation risk, or credit risk. We have a few more participants that are voting right now, so we will give it a couple of more seconds. Okay, we will close the poll now and see your results.
Wow, I think that was expected.
Yeah.
So, yes, so the technology risk is actually the highest risk which people are now facing. If you even see the Finance for All, which was just a recent survey in 2018, last quarter of 2018, the technology risk was the highest risk was rating from the last couple of years. And previously, it was actually the strategy risk also. So let's talk about the strategy risk first and then the technology risk. Ida? Yes, so on strategy risk, most of the institutions focuses on operational risk, technology risk, but that all starts with the proper business strategy. In the banana skin survey, as I told you before, the strategy risk was the biggest risk where it was identified that most of the institutions are not working on the proper strategy and they end up with the biggest financial losses. My key questions which to you all is, which we observe as a strategy risk, how well is the strategy actually defined by your institution? Has your company considered all the internal and external factors? See, what is what risk scenarios has my company, for example, my company need to consider to test alternative plans or alternative channels or contingency plan? Has we have mapped risk or key risk performance indicators or value measures from our partners? Let me tell you, some of the institutions make their strategy or their business plan of the start of the year, or let's say at the Q4 of the year. However, they don't review them based on the change of market. Remember, market is changing day by day, and we have to update our strategy as needed. Next slide, Ida. So this is also a very good example of technology risk. As you all have considered technology risk is the high percentage, let's talk technology risk in a more detail. And I'm sure Ida and Donna can give me a time on that also. This is an example of technology software. As you all see, software are connected with each other. The one software are connected with each other through APIs, application programming interface. If you see, your MNO system is connected with your company core banking system, or I would say also a DFS system. Your core banking system, your CBS, is connected with different providers like payment gateway, internet gateway, or others, or let's say SMS, or let's say from billing point of view. So it is important to test and analyze all the system before connecting with your core application or before going live. In my experience, let me tell you, I have seen institutions, they connect their CBS with other providers or systems with APIs, but they don't test before they go live. Sometimes they test, but they don't test once they go live and after the maintenance. So it is important that you should test, analyze, and also post, let's say, test that it is working well or not. There was an institution, actually they have deployed their automated parts of loan application process. However, after a month, the loan application were directed to or mapped, let's say, to the third party provider. Customers' data was leaked. The institution was in big reputational risk. So the point here is that you have to test, and then it's important to test. And once you are deployed, you also again you have to test for the proper maintenance and from the monitoring point of view. If we connect this also with the next slide, Ida. Yeah, so if we talk more about the technology, these are the major risks which most DFS or FIs are facing, like software failure, hardware failure, or network connectivity, cyber attack, etc. I think that these are the major risks which we all are facing. That's why you have highlighted the technology as the highest risk. Now, here it is also shows that how good your institution have business continuity plan in place. Let me ask you one question here. Did you have revised your BCP document? When did you tested your last, let's say, core businesses which are not operating or you thought that it is not operating? Let me give you also a very good case study. You know, in Kenya or in East Africa, most merchants, financial institutions, or even banks work on M-Pesa as a payment channel. Recently, the M-Pesa channel from Safaricom was down or was outage. Most of the institutions who were relying were unable to operate. Clients were not able to get the loan or repay, or even merchants were unable to do their businesses. So this was chaos in all of the country in Kenya. Though it was just for some of the hours, but it was a big chaos. However, most of the institution and general public were suffering from this, let's say, technology outage. My question here is, what if once you have deployed any technology in your business, what if the ADC, the alternate delivery channel, will not work for 5 days? What if the client can't access your USSD channels or your IVR channels? If it is important that we should have a proper contingency plan in place. And proper contingency plan doesn't mean that you revise your document, you make your document, you hire a consultant for making that document, and afterwards you are not testing, or you are not, let's say, improving your document or drilling, let's say, that testing that document live from your system, or change of your system to day-to-day activities. Next slides, Ida. Partnership risk, that's also a major area where people are actually focusing, because you are partnering, let's say, with all of your services with other third-party vendor. This is again an area where most of the institutions fail to mitigate the key risk. As you rely most of your services from partner, you should have a strong partnership agreement. In most cases, it is also noted that core business function like IT, risk, or audit team are not involved in reviewing the partnership agreement. So how they will analyze the risk, how they will review the risk, it is sometimes are only involved by the key business shareholders or key stakeholders. It is important to review the agreement from all angles. Your partner system can be hacked, let me tell you, by someone, and they can create fake IDs, data leakages, etc. Remember, your customer knows you, not your partner. They don't know whom to you have signed the agreements. If anything bad occur, your brand image will be spoiled in the market. And image, once it is spoiled in the market, you all knows it cannot be reverted back. Let's hear from the partner or vendor risk in the next slide. Next slide, Ida. So my key question again here is that what are the most critical elements to observe when selecting technologies and vendors in DFS? Because we talk more about on that. So technology risk is actually occurring from the partners also, or vendors or technology providers also. So let's hear this from you guys, that what are the major risks or most critical areas you are focusing. Ida, can you start the ball?
Of course. So our next poll, as Fahim said, the question is, what are the most important criteria in selecting the vendor in digital financial services? The options are clearly stated KPIs or key performance indicators, affordability and transparency in sense of terms, conditions, and fees. A third option is clearly articulated service level agreements. Fourth option is how advanced is the technology a vendor is offering. And the last option is contract MOU with vendor that includes contingency plans. So we are going to leave you to select what do you think is the most important criteria, and we will close the poll in about 15 seconds. Thank you. Just to remind you, multiple options are allowed.
Aida, we're having some technical problems with your microphone, so I'm just going to tell people what you just said. Multiple answers are allowed, but I think we can close the poll and see the results. And the results are, just so everyone can see, wow, lots of, so we have 3 top ones. Just Fahim, I'll read them to you, that what people picked: affordability and transparency as one of the important criteria, clearly articulated service level agreements, and contract MOUs. A lesser point was the clearly stated KPIs and how advanced is the technology. So I think everybody thinks a lot of these are important. I'll let you go. Take it over, Fahim.
Okay, so yes, I think that you have rightly answered that. And after the poll, actually, I want to say you, if you can come to the next slide, Ida. Yes. So the factors which you need to consider successful partnership, we need to analyze the vendor very carefully. As you have articulated that the SLAs should be very, very clear, and it should be mentioned that what services you want, because the technology providers or partnership, they don't understand your business. Remember, you are the one who understands your business. You are the one who understands your customers or your clientele base. So you are the one who will be clearly lighting your SLAs that what actually you want, and and you have to test that what are their values also, what are their providers or competitive advantages if you will onboard them. And remember, once you have selected, you have to do the requirement analysis very carefully. Hardware procurement, remember, once you are signing something, the hardware procurement is very costly, and you need to understand what hardware you will procure, because some of the areas or some of the technologies are not written very properly in the agreements, but afterwards you get to know that, okay, we have to purchase this hardware procurements also, but you do not have that budget, or is the budget constrained in your institution. Once these both are done, then training and testing is most important. More of the time I've seen that most of the institutions, they actually install their new hardware, or let's say new software, but their people who will be using are not trained, or they don't know how to use it. So it should be very important that it should be trained and tested. Configuration and customization in your CBS is also important. You have to properly customize them based on your needs, not based on their needs. And then once you are going live, as I said before, you have to do proper maintenance review, and the post reviews as well. Next slide, Ida. So before coming to operational risk, we need to ask ourselves, do my institution have a proper business processes or process flows, proper policies and procedures, proper controls in place in these processes which I'm defining? All above, do these processes are properly understood by my employees or by my assets? If yes, then you are less likely to face the operational risk. Remember, undocumented business processes or weak internal controls, no process segregation of duties. In most of the institutions, if you see, the businesses they give lots of access to the IT or DFS. There is no segregation of duties, functions, and they actually perform the maker and checker both. And they actually sometimes also approve the transactions. So mitigation of these risks are important once you consider digital transformation. And these are the areas which I have mentioned here as a risk. You need to also mitigate them very carefully. But this is a very short list. The operational risk can be very high also with the number of other areas which you are focusing in your institution. Next slide, Ida. So this is the clear example of good business process which covers end-to-end. This is just an example, let's say, which we have presented here. Like if you see, it starts from one end and it approves, means yes, go to the second level for review. If it is approved, it's yes, and then it will go for other one for successful review. Or let's say if it is no, then it will be stored in the database with proper system logs. It is important. Even if you reject anything, then it should be stored in your system logs. And is someone is reviewing your system logs? Is there a person who's reviewing your daily system logs, because you are now having a huge or big data? We will be talking more of this system logs and these IT technology area in the next sessions. Sometimes the business processes are too long. Let me tell you, they are too long, and it is a narrative form. Let's say in the big policies of 20 pages or procedures, employees actually don't understand them properly. It is important. You should train them, your staff, on business processes from end to end task, because they don't connect the dots that what actually they have to do, and they perform their own task, or let's say their own activities, and you end up with the huge business risk. Next slide, Ida. Fraud risk is a serious concern in digital banking and finance. Digitalizing your service also create a fraud risk, and frauds can be very expensive, not only in the terms of financial but also in the terms of reputation or your brand image. So fraud can happen at any point in the transaction, through agents, through third-party providers, internal or external even. Most of the time also people don't focus on the internal frauds. Like any other risk, the impact of fraud can be reduced and mitigated by the introducing the right control. However, it cannot be eliminated completely. Remember, it cannot be eliminated completely, but you need to put a mitigation control. You need to test the mitigation control. You need to put the what are the key areas of the risk which you can focus. Fraud can have a large impact on your reputation of your institution and the industry as a whole also. Proper mitigation measures, as mentioned here in the most of the areas, are important, which can be deployed in your institution. Periodic review of your security information, your data is most important. Sometimes awareness and educations are also more important. Let's talk about the awareness and the education which employees or let's say institutions are deploying in their organizations. Can you go next slide, Ira? So, what providers are doing to manage the fraud in DFS? They are actually enabling organization and people. How? They have actually preferred to have the dedicated or compliance team. It is important that you should have the dedicated or compliance team which will be looking after more of your fraud, or let's say scenarios of the fraud. They have the fraud risk program, let's say program management, which they are looking for that what are the red areas, what are the gray areas, what are the yellow areas. Their leadership and management and the staffs are responsible in relation to governance, security, monitoring, and also from the fraud risk mitigation point of view. They have the proper agent network strategy and the management. And most important, there should be a complaint hotline, the direct hotline where the customer can call. But sometimes the hotline is there, but it is not communicated to the customers that to whom they have to talk and how they have to talk and what is the number which they can dial. This is actually from the side of organization or people. Let's come on the technology side. If the technology sides are there, let's say the technology elements are implemented. What are the technology elements which we can implement for prevent the fraud? Number one is actually the biometric, which are the good to mitigate the fraud. Then cloud environment. Yes, there are some institutions which are now 100% on the cloud, but as I said before, the cloud environment has also risk. The cloud environment and the risk we will discuss in the next session also, which will continue from here. Greater centralization of transactions management, data storage and security. Data storage and security is the most important area which from technology side you have to manage the risk of fraud. Then online and real-time transaction processing, use of analytics and dashboard reporting, because reporting is most important, which actually identified your suspicious transactions if it is occurred on the real time or on your database. Next slide, Ida. Regulatory or legal risk. As I said before, regulatory or legal risk is much important. We need to be very careful in bringing customer on board with the proper KYC and AML in place. Most of the regulators have introduced the data privacy bill. If you see that it came from Europe, it is actually deployed in East Africa or overall in the Africa. Most of the organizations have actually lost their data privacy by not following the security or regulatory guidelines, and they have ended up with lots of fines or losses. We should align our operating model to the change regulation, or let's say to the design our business processes to be more efficient in managing our documentation or data management. Let me show you one case study with the regulatory risk which they have focused in Nigeria. Can you go next slide, Aida, please? Okay, so this is an example of MTN Nigeria. What actually happened that MTN had actually relied on roadside vendors for registration of their customer. 1.5 million the subscribers were unregistered because they thought that it is registered, but it was unregistered customers. Then fine imposed for filing to documentation from disconnect customers with unregistered SIM, because the government has imposed that okay, you have to put all the fine, and the company of the CEO, the company CEO and the other high level management have resigned. The issues threatened to shut down the operation even in MTN in Nigeria. MTN market shares goes, let's say, wiped out in the market. And above all, above the regulation or the reputation risk was not coming back, let's say, years on the years. This example actually shows from the regulatory or legal risk point of view, which actually gives me a counterparty does not perform or provide service as agreed upon. It's important that a counterparty does not provide whatever services you have requested. Service providers, businesses sometimes goes out and you will suffer them. Risk of, let's say, money laundering or anti-money laundering is actually control should be in place before you are registering the new customers. And let me also ask you, if the organization does not comply with the applicable law and registration law, let's say regulation, which will actually result in fine or closure of business. So it is important that these are the areas of regulatory or legal risk framework should be looked after by the organization. Next slide. Regulatory also connects, let's say, with your reputation risk. Next slide, Aida. Okay. So regulatory also connects with your reputational risk, and reputation risk is most important. It's actually not direct risk, but it results with the other risk related problem like reputation, operation, fraud, and other risk, which connects actually with these risks. Institution should have the proper communication plan to alert. Some of the institutions actually don't focus on the reputation risk. They do not have the proper procedure. Do not have the proper policies that what actually we have to do if something occurs from the reputational point of view. You know, right now is the era of social media. So information goes out very fast. So there should be a proper procedure in place to manage the press, to manage the social media inquiries about any incidents. If the incidents are occurred of any kind of media or let's say press, then how it will be documented, how it will be managed by the company. That's the most important. However, who is the one who is looking or hearing, let's say, your customers complain? That's also the most important, because if the customer complaints are not looked after carefully, it also ended up to the social media or to the press. So reputation risk is the most important, and we need to focus this area also very carefully in our institution. Once you are, let's say, performing, or let's say you are going directly to the digitalizing your institution. Next slide, Aida. So alternative data and credit scoring tool. Most of the institutions are now going on credit scoring. You know that most of the institutions, they want that their credit decisions should be properly handled by the credit analytical system or any tool. So however, it is important your data is secure as you connect your data, like pushing and pulling. Most of the institutions are actually pulling the data from other institutions or providers, or pushing their own data, let's say, to that provider so that they can give the credit scoring tool. But it is also important that your information sources are actually going here and there. Example, your informations are going to the government securities or government institutions provider or third provider or data analytical tools or data service providers. So it is important that this should be properly linked with your credit risk assessment and data monitoring. If your prevention controls are not there, your data credit scoring, as you are looking as it will give the good credit scoring for your clients, but you will end up, let's say, losing your major data also. So credit scoring, once you are deploying in your institution, it is important that you should connect all the risk of that before going live from the credit scoring point of view. We will discuss more of the alternate data, that how it moves, how, let's say, the credit scoring tools work, and what are the major key areas which you need to focus or once you are deploying credit risk in the next, let's say, ongoing session. Next slide, Ida. Okay, so process automation and product risk. Remember, even if you are not going fully digitalizing your business, for example, you just want to deploy your loan application module on tablet, remember you need to also be very careful in terms of process failures. There are a number of institutions which I have seen from my experience who have actually deployed some of their process automation, for example, the loan application, and they are actually, however, they have ended up again with the manual process because it was not working well, because it was not tested well, because it was not tested by the user. You know what happened once we automate the processes? Who is using that processes? It is the staff on your branches or on your units or on your locations. It is not the head office staff. It is the staff who is operating in the ground. So the ground staff are not actually involved from your process automation point of view. You need to put them also as in your team member point, so that they can also test. They will actually give you the proper area which you need to focus, on your product risk. You need to focus on your business risk, and then you need to make the proper mitigation plan. It is important when you are performing customization or configuration in your CBS, the process automation should be well tested. And as I said, it should not be only well tested by the IT team, because IT team actually will test from their knowledge point of view. It should be tested by the actual user. And who is the actual user? It is the ground staff or the staff who are actually will operate. There's a high chances when you lose your end data or end up with the cyber crime also once you are automating your little of your processes also. So you need to have the proper processes of data backup procedure, and also it should be in place, which should be tested. Let's say you close one business and you should test that how it is working. The key management processes are properly executed before, let's say, you go live. And as I said before also, after going also live, you need to again do the monitoring point of view that it is working well or not. Next slide, Ida. Channel integration risk. Once you are connected through ADC, you should test your channel integration. However, let me ask you something. What are the channel integration which you have deployed? Maybe you will answer that we have deployed USSD, we have deployed IVR, we have deployed our PIN testing, or let's say our customer onboarding, or let's say customer onboarding from loan application point of view, technology based on the tablet. So it is all important that once you have done any channel integration, because you are sourcing only with the one vendor or maybe two vendors, but these two vendors are properly tested. If there is one channel, let's say for example USSD or IVR or online banking is failed for your organization, as I give you the example of M-Pesa, then you will face the huge risk, and mitigating that risk will be very difficult. So you need to test them. You need to have the proper contingency plan, and the contingency plan, as I told before, it should be tested and it should be monitored well by your organization or by your team members. Next slide, Ida. Okay, so this is an example of different living customer credit based on the digital data. If you see here, there are some of the actually have divided with two. So there is a role and value proposition and example of MNOs, which is mobile money operator or mobile network operator, financial institutions or FIs, and the FIs with data analytics firms, which are actually giving you the credit scoring or giving you the reporting kind of thing, which you need to actually bring the role of your organization with proper partner by analyzing your operational cost and conducting the data analytics. We will actually discuss more of this delivering customers and their how the technologies are working with the different stages in the next series of this slide. But here, if you see that once you will read the roles and their responsibilities or the value proposition and the examples of the institutions which they are working, this is performing very well. It's also right now, if you see that AI and BI, the artificial intelligence or business intelligence, also playing a major role in terms of digital data. Now people are actually doing chatbots. Now people are actually calling directly to the robot. So it's actually growing more and more from your data or from your data, customized data or digital data from your institution. However, as I said before, as the new technologies are growing, the new emerging risks are also coming. But it is more of your traditional risk also. So you need to focus them and you need to analyze them before going like live with the new businesses. Next slide, Ida. Okay, so as we end up, let's say the points here which we need to focus more on the risk management framework point of view. As you see that most of the institutions are failed to maintain the risk management point of view. Why I said failed? Because they focus sometimes on one risk majorly. For example, the credit risk is focused too much. Sometimes operational risk are focused too much, which actually connected to also from your technology risk, which actually also connected with your strategy risk. So they need to conform and they need to connect with all of your risk, which you need to have analyzed in your system. You need to identify the risk, you need to evaluate them, you need to respond them and define proper planning and most important monitoring them. We actually have to do the part of monitoring is most important, because once we complete all the risk management framework and then we sit back and we relax, we say, okay, wow, I've completed my risk management framework. It is more of international risk management framework. However, most of the institutions, they actually don't monitor them day-to-day basis, because as I said before, the market is changing and you need to be very fast from your market side of you. So otherwise, if you have not monitored or you have not brought the other new emerging risk in your institution, in your risk framework, then you will end up again to the new risk which you have actually not focused or you have actually not identified for your institution. Next slide, Ida. So to conclude in nutshell, we have to also have to focus on the question and answer, which is most important. So to conclude in the nutshell, we need to understand the customer needs. Remember that. And how the technology can respond to these needs in fundamental. Watch your institution risk and connect opportunity to stay digitally relevant. We need to connect the dots. Here, if you see the strategy risk with partnership risk, the partnership risk with technology risk, the technology risk with fraud and financial, so on and so forth. But it is actually connected with each other. Operational is connected with your reputation. Your fraud is actually connected with your technology. So this is most important. You have to connect your risk with each other. And this is actually which will connect your DFS risk framework module for your institutions once you are deploying a DFS complete module in your institution, or you're deploying a small, let's say, processes automation in your organization. Next slide, Ida. Okay, so these are the resources which I have highlighted a link here. One of the resources actually you can see in the handbook also as a handout, and these are the areas which you can see, which you can download and you can read them more from the AML point of view, CFT point of view, risk management point of view, how the risk of digital finance are actually growing, what are the practice guides are there. There are actually the tools also which IFC or some of the other institutions have provided. You can use them to that tools also. We can also connect in the next slides, which will be, let's say, more on how we will be connecting and how we'll be discussing about the technology in our institution. So these are the different resources which you can download and even you can share with your colleague. That's important to learn and share is actually most important. Whatever you have learned, you should share with your colleague, with your other let's say, asset or your employees in your organization. Next slide, Ida. Okay, so question answer.
Thank you, Fahim, for a very interesting seminar. Those links in the previous slide, we will be sending you the presentation, and we made that so you can actually in the PDF click on them, and that will take you to the website to download those items. If you have any difficulty, you can let us know. So Fahim, we have a number of questions. Just one is a clarification. Somebody wanted to ask, because some of us aren't as, some of us or some countries aren't advanced in the digital process. One asked, who is a partner in this type of entity with digitalization? Can you just maybe clarify for some of us that aren't as advanced as Kenya?
So if I understood correctly, you are saying that who are the partners who are providing the DFS services, right?
Correct. So who would come?
Yeah, so their partners are fintechs institutions, the fintechs companies, the MNOs, the mobile money operator. For suppose if you want to digitalize your overall cash, let's say module, the payment module, or let's say obtaining or disbursing the loan, and let's say obtaining the repayments also from the client. So it's a mobile wallet. So mobile wallet operates again from the telecommunication from MNOs. Or let's say if you want to bring the new systems, let's say you want to do the data analytics from then and data analytics firms, which are actually Microsafe, Helix, and other institutions. Then other, if you see also from the technology point of view, then CBS, if you want to deploy the core banking system, the new core banking technology, then you have to again go to the technology provider, which is Oracle, which is T24, which is actually deploying your technology based on your banking services, your microfinance services, your fintech services. Most of the fintechs are also now deploying their own, let's say, customer-based services or their customer-based, let's say, module. So I think these are the areas which these are the partners which is available in the institution. If you want that, what are the kind of partners and what are the institutions they are operating, we can even share the list of them based on your country if they are important.
Thank you, Fahim. So another question that was asked by a couple of people is, can you just explain the digital practices that you're doing in Kenya and at Masoni?
Yes, why not? So we are operating, our operating platform is on high tech and high touch. What we do, we register them on USSD or mobile app, or let's say browser. And even if you can do, let's say from the browser point of view, from website, from USSD, and from mobile app. So once the clients are registered, then the data analytics works here. The internal KYC works here from the partner's point of view. The CBS, CRB also external point of view. Let's say it's verify the client's detail. From customer preferences point of view, if the customer is already was your client, then actually it reviews all the previous activities of the customer which was conducted by you. Then the credit scoring module actually gives you that you have to approve this client or not, and based on the benchmark which we have decided. The loan processes, actually loan applications, are also from the loan mobile phone point of view. It's not from the digital, let's say, or let's say manual work or traditional work we are doing. It's all automated. Even customer can himself or herself can actually fill the loan application from mobile, let's say, application module. Once it is done, then we have the customer relationship management also, which is actually from the call center point of view, intelligence software. We have also cross-selling, we have targeted market, we actually talk to them, we actually give them services, we actually have the digital literacy program, we have the social performance management system, we have the CPP system along with that, so that we can give them continuous services based on what they require. And from value financial or operational data point of view, once we have collected this data, the data is the defined set of indicators. The indicators actually works from collecting the data, use of data, manage and analysis the data. We have actually data science department here, which actually works on the better product services, what we can deliver, how much time it took, let's say, to onboard customer. Also, we take the NPS role, the net performance, let's say, services, even from the client point of view, even from the staff loan point of view. So this financial and operational data actually relevant for us. It actually gives us the relevancy. It actually gives us the completeness, timely, reliable, and also easy to understand. Because the data science is more important. Because once you get the data, data is the one which you have to work on that. So in a nutshell, if I say that we are digitally onboarding customer, we are doing the credit scoring from digital point of view. 20% of the loans are using, let's say, from the internal data. We are doing the credit relationship management, let's say, a point of view, let's say with the call centers and other providers. Then we are also doing the digital loans portfolio, and above all, now I have just told you the businesses. Now let me tell you the risk also. So from information security point of view, also from the risk management, there are three levels. The level one is actually the core, which you have to see the day-to-day activity, the repetitive services, the compliance focuses, let's say the ongoing audits, the universe audit, and let's say you need to see the ITGC, information technology, general controls point of view. You have to test your DRs, your on-site, your businesses, your RPOs, your recovery time objective or your recovery point objective, how it is working, how are the SODs, the SLAs are working. From advanced point of view, we again do the attack, or let's say ethical attacks or penetration testing. We actually also do the end user computing, that how it is working, software, let's say asset management, how it is working, GRC point of view, governance risk and compliance point of view. And then from again going to emerging point of view, we actually have the IT risk management in place, where whatever I've talked is all connected with each other. We have a cyber terrorism point of view, let's say the framework available, where we talk about more of the how the cyber attacks can be done. We have actually tried to that how it can be done and how it will work. Then again, we have a social media. It's important. Let's say the media management is so much important, and responding them is also so much important. So as I said, it is from security, from information, from information security point of view, we have a core, we have an advanced, and then we have a emerging, which is actually growing too much. I hope I have answered, but I can invite whoever are interested more to hear about Musoni, or let's say our business module. We have actually the study tour, which we have organized for 2 days as a business host, which we will do in here in Musoni in Kenya, or let's say we will be sharing the East Africa practices. And then one day it will be, let's say, a tour, or let's say visiting the clients will be also organized. So we have actually organized this tour where most of the institutions from East Africa, or let's say from West Africa, from Eastern and Central Europe, and also from Central Asia and South Asia are actually visiting in the Q2. So if someone is actually interested, I will be, let's say, we will be happy to host them in Q2. I will give the exact date on, let's say, the timeline, and that we can host them and we can show them the business module actually, that how it is working.
Thanks, Fahim.
No.
So for the site visit, you can contact Fahim directly via his email that's in his bio, or we could always give it to you, Aida or myself. So as we can see, East Africa and Musoni in particular is quite advanced with digitalization. Now we got an interesting question from Pakistan, Fahim. What the question is, they say, in Pakistan, we are facing risk and challenges in implementing DFS, such as poor infrastructure, poor infrastructure and telecom connectivity in rural areas, lack of financial literacy. Is there anything you can talk about that you in your work, because I know you've worked outside of Africa also, you can give some recommendations or how you deal with those challenges in the DFS world?
I think that most of the institutions have to connect or have to do the partnership with the institutions which they are already providing. If you see the Telenor, the Ufone and the other telecommunications with the services they are providing, like cash in, cash out, and the mobile money operators which they are doing right now. Recently, HBL have also introduced a very good services from mobile money operator. Jazz Cash is also improving too much. I understand the technology, or let's say the poor network, let's say, is there in the rural side, the area where most of the customers are, which we need to focus. And I think as the time is going on, I think that these technology, as we compare from the last 2 years and today, it has actually improved too much. I believe that next by 2020, it will be improved also too much, let's say, from the technology point of view. However, as I said before, the institution actually don't have to focus creating their own DFS module. Maybe the DFS module is already available with the technologies provider or banking service provider. They need to connect with them so that they can reach to their clientele with their services. But as I said before, the partnership risk and vendor risk is also important to be vetted, to be tested, and to be maintained very well.
Thank you, Fahim. So I have a very simple question. What do you, for business continuity, what do you recommend is the frequency of reviewing an institution's business continuity plan? How often?
I think that business continuity plan, actually you need to first assign the BIA, business impact analysis. What business will be impact? The business continuity plan is not important how much you are testing and how much you are drilling, let's say, and what is the frequency. The important is what are the important business which can be, let's say, which can go to the failure or can go to the end, and how you will recover them. So the business impact, the start point is actually the business impact analysis, how your business will be impact. Now the impact starts from internal point of view, let's say from the internal business point of view, whatever you are working with partners, with technology vendor provider, or let's say from other data centers, or let's say DR sites. Then from the external point of view also, which is not, let's say, man-made kind of the risk or impact, which can be, let's say, terrorist attack, which can be refugees, as the refugees risk are actually increasing too much. Your clients are actually leaving your country. And then also from the from the political point of view also. So these are the areas which you need to consider, and you have to bring them in your BCP document. Then, as you asked that how much we can test, you need to test the important area which you think that most important area, maybe monthly or maybe quarterly. And then if you have to test the other areas which you think are moderate or low, you can test them after, let's say, a 6 month or biannually or annually also. So it is up to you, because I don't know what risk you are facing currently in your company, or above all in your country, and then you need to focus. If I can give you the example of Musoni or overall in East Africa, what we are doing, we are focusing on the major business impact analysis, let's say the ADC, the alternate delivery channels. So we actually close one alternate delivery channel and we use the another alternate delivery channels for some days, and we actually train not to our staff but also to the customers, because customers need to be aware that if this service will be off, then I have to go to the next service, next channel. And this is actually, once you have to, let's say, test, you have to do drills, then your customers will be aware about that, let's say, the alternate delivery channels. Otherwise, if you will be only saying that, okay, my one alternate delivery channel is this, my alternate delivery channel right now is A. So if A will stop, I will go to B. And for example, A is stopped today. Now you went to B, but your staff and your, above all, your customers are aware about that the B channel, because they are not aware about that. So communicating to customer on that time will be again difficult. So you need to train your customers, also informing them that this is the channel B which you need to respond once if something happened. Or let's say once you are testing them, then they will be more on regular frequency. They will be aware that this is the channel which I can go if channel A is stopped.
Actually, we could actually do a whole session on business continuity planning, which makes me think we should do one in the future, because it's an important discussion point right now in this world and what's happening. Okay, one last question, Fahim. This is interesting. So the person states there are potential risks, e.g., agents' misconduct, agents' inability, data privacy, data protection, security. So how do you manage the technology vendor risks?
I think that technology vendor risk is a whole huge topic to discuss here. It cannot be answered here in the one single or two lines. As I said, that in the next session, we'll be discussing more about the technology, their implementation, and their risk. But if you see more of the technology, the areas which we need to focus on technology is actually getting to know technology component in the financial services. What technology components you are using in your financial services. The critical factors to be considered when selecting the technology and the vendors in DFS. And once you are selecting it, then you have to actually have to manage them. You have to actually test them. You need to understand them. Sometimes we bring the new technology, but we don't understand. And once we do not understand, definitely we will be not able to manage the risk also. So implementation of that new technology or the product which is connected with your technology implementation framework is also important. Then data driven, as you also asked, the data driven product development is also important. So these are the key areas which we will be discussing thoroughly. Let's say, I would say not thoroughly, but again, the key areas we will be discussing in the next slides, in the next session. And wherever we will be discussing that how we can implement them, how we can focus the technology risk, the key areas of the technology risk. What do you use? Let's say what we use as a technology in DFS deployment, and what influence us to use that decision of the new technology. We need to also let's say understand the customer activation point of view. What are the areas of distribution point of view, the distribution of agent networking. Also, you have asked the new areas of coming, the new areas of risk are also coming. From payments point of view, front end payment, back end payment, what are the technology providers are and what are the risks are. So I think these are the major areas which we will focus in the next area, and also getting to know the technology component. Some of the people or some of the companies do not understand the physical devices like mobile phones, or let's say features phone or smartphone, PSOs, and then applications module, or let's say how to put that application module as an authentication modules, and what are the communication channels which they actually have to use for the DFS. So I think this will connect with each other, and we will talk more about these in the next session. And I hope I have answered here somehow. But this is actually the whoever have asked this question. This actually is increasing, and is a good question. Actually, is increasing. The emerging technology risk are actually increasing. That's why in the poll also, if you see, the technology risk was high.
Thank you, Fahim. Aida, next question. So I'd like to thank Fahim and note that he has graciously volunteered to do another session on technology and risk management, most likely in May or June when he's available, because he's quite busy. So please take time at the end when you close the session out. There'll be a survey. Any questions that weren't answered, Fahim has agreed graciously to answer, and we'll get the answers to you probably within a few days. If you have topics you would like another webinar on, please suggest them to us. We are open to different topics. For any questions or comments, you see mine and Aida's email. And we also have the links to our previous webinars that we had. One was on digital transformation, and the other one was on bad work habits webinar. So thank you again, and thank you again to Fahim. Have a great day. Bye.